Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is currently 7:30 a.m. Central Time, and I'm recording this in preparation for the market day of January the 2nd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing and trading decisions that you make. So let's dive into the key highlights of today's report. A couple things to keep in mind. In terms of special research points, during uptrends, and we certainly are in a very strong uptrend at this point, moves down at the end of the month will often set the market up for an early month bounce. And as we discussed on this broadcast on our previous trading day, Wednesday, we expected that there would be a sell-off in the later part of the day, and we certainly did see that, especially in the S&P 500, where traders were taking and booking tax losses to offset their profits to be able to maneuver themselves for their tax paperwork. So a couple things to keep in mind there. That often sets up a bounce for the beginning of the month. The next thing is that strong one-day sell-offs in between Christmas and New Year's have typically been followed by a sizable bounce. So something else to keep in mind in terms of, the inclinations of the market and how it behaves. When the market has moved from a 50-day high to an 8-day low in just 2 days, it has commonly been followed by a bounce. So several conditions that really set us up for a likely bounce. And indeed, in the overnight action, we'll get into the overnight reports in just a moment, but in the overnight action, we did see where there were some moves up from those lows that were created on Wednesday afternoon. In terms of our market trend, intermediate term phase, we're still phase 3, bull flag, bull flat, higher highs, higher lows. Really no changes here, so we'll go pretty quick. Portfolio trader posture, uptrend is still under pressure. We did add a distribution day. We'll get into that in just a moment. But we continue to have this divergence between the active trader market posture, where it says that short-term and intermediate-term bullish trades are okay, and yet our portfolio trader posture is still uptrend under pressure. So that divergence continues to be present. That also is reflected in portfolio positioning, calling for 0 to 25% on our portfolio trader position sizing, versus with the volatility calling for 100% or 75 to 100% of full position. In terms of market timing, we have elevated our outlooks. 1-day outlook, very bullish. 3-day outlook, very bullish. 2-week outlook, bullish. In terms of market posture, that market forecast opinion, 3 of the 4 indexes are in the upper zone. Do note, though, that the NASDAQ did turn bearish as it dropped below the 80 threshold on Wednesday's late afternoon action. So again, another warning there, this time coming from the NASDAQ. Our hedge warning status remains at level 1, which is our kind of brake lights or yellow light. Caution still exists because of this uptrend under pressure, though we've had a lot of these warning signs come off in recent days. We still have a number of concerning things, and especially as you look here under distribution days, uptrend under pressure. We have had 6 distribution days with the S&P, including one on Wednesday, and on the NASDAQ 8, also one on Wednesday was captured, and we now have 6 distribution days in the month that just closed in the NASDAQ. So these are serious warning signs, though we do have in cross current, very very bullish conditions coming into the beginning of this month. So at some point, obviously, we're going to get a pullback, and this is part of what's being reflected here. And Probably just that, though. Probably just to pull back. That's the opinion here. And then probably more of a buying opportunity, and then off you go into some seasonal bullish action. VIX phase is trending down on the intermediate, though obviously in the last couple days we've had a bit of a pop, and the VIX is certainly in the short term, well up. Option income strategies are within the window of acceptable conditions, so it seems to be an all go from that standpoint. And we'll quickly just note here our market posture by sector. Obviously, in short term, we had quite a bit of deterioration in our sectors when it came to the action that came into play. So you see a lot more neutral and even down activities. Telecom and energy especially, very, very weak sectors. Healthcare took a bit on the chin. It has indeed been perhaps some profit taking in healthcare. It did very well in 2014, but it is in recent trading days has been, as a sector, pulling back somewhat. Retail continues to be very strong. Consumer discretionary and transportation. The transportation being up is a good sign for the long-term market bullishness. Obviously, in percent change across the asset classes, you saw everybody took it on the chin on Wednesday, as expected and as discussed. Same 5 top industry groups: retail, railroads, transportation, internet, and healthcare. So those should be the primary focus of your activities if you're setting up bullish trades. Bearish trades, you can see down here at the bottom, obviously the energy complex, oil complex, very much hit. Gold continues to be hard hit, especially the miners. And then, of course, coal is not in favor with this administration, so it will continue to be very, very, very poor conditions. And let's take a look at our morning report. Overnight action, as I said, across all the indices, a little bit bullish and as expected, and a bit of a bounce from the close. You also had with our commodities, gold was down just a shade to 0.16. Crude oil essentially flat. A couple things to note on the macroeconomic reports. In terms of the U.S., the only thing that's really of note is ISM manufacturing PMI. Also note, even though this is the first Friday of the month, we do not have the monthly unemployment report today. That will occur next Friday. And in terms of volatility, note that implied IV across all 4 indices has been climbing, and now we have all 4 of these in the middle zone and really heading towards the upper zone. So that's a bit of a tell that we might have some volatility coming back into the marketplace. And of course, we see that the S&P 500 did have more than a standard deviation move on Wednesday. So that one was the primary source of volatility with that fall off on Wednesday afternoon. So greatly appreciate, as always, you're following us on the blog or on social media. Be sure to like us if you like what we're doing, if you're getting value out of what you're seeing here. It's important to us and to you that we're able to communicate this, and certainly your encouragement by liking us is very, very much called for if you'd like to see us continue to provide this free video market forecast preview each morning. As always, more information can be available from the website falconglobaltraders.com, where you will find an offer for 2-week free trials to any of the 3 live trading rooms, whether it's stocks and ETFs, or it is options or futures. We have all 3 available. Email support at falconglobaltraders.com. The disclaimers, as always, if you'd like to read this, just hit pause. And then, of course, we always thank you for your feedback and contributions to the Falcon Global community. Always welcome. and you have a great start to the new year. Thank you.